What's up, good people? How y'all doing today? Welcome back to Sooner Pro Gaming Channel. You ride with your boy Rafe. We're here trying to coach you on how to invest, grow your wealth, become stock investor tycoons, you know what I'm saying? Then, once you invest in the stock market and you become, profitable, then you can think about doing some other things. But I would say the stock market, stocks is the least cost spending thing that you can get in if you want to, you know what I'm saying, take that risk, jump out there and invest your funds. So let's say if you was trying to invest in the stock market today, where would you consider looking to? Okay, so we've been hearing about this thing called Google stock split, 20-for-1 stock split, Amazon stock split, 20-for-1 stock split. Okay, so let's pull up our, make sure you always got your handy dandy tools here. So computer will be your handy dandy tool. So we're gonna go to Yahoo Finance. Kind of one of the places where you can kind of go see some quick numbers real quick. So we're gonna look up Google. This is the ticker symbol for Google. Ticker symbol GOOGL. So that's Google's ticker symbol, GOOGL. So we go right over here to GOOGL. Okay. And as of today, we record this on this good old happy Sunday, Google is trading at $2,662. Never know, it can go down, it can go up. But from looking at, just the numbers on Yahoo Finance, it seems like it's undervalued. So we did a little research on this, and Google is kind of undervalued. They may drop it, a lot of market manipulation, or it might go back up. But the company is a $1.76 trillion company. The P/E ratio is 23.76, but they have a stock split coming up. Okay, Google stock split. Okay, so it says July 1st, 2022, Google stock split is going to do a 20-for-1 split. So if you own one share of Google, when it do a stock split, you'll get 20 shares. So let's just do our math real quick on what the stock split going to be. So let's say if you bought Google around this price, or if you can just kind of get some good timing and catch it at a lower rate. But let's just start off with this price today. 26 divided by 20. That's $133 per share after it do the stock split. So you just divide this by 20, and you will get $133 per share. Okay, so this will give you a chance to own 20 shares of Google right around $2,662. Okay, so basically, like any other investment, you taking a risk. Risk is always involved, so you gotta always keep that in mind when you you know what I'm saying. Anything you do, you real estate, merchandise, risk going to work at your job. You know, a lot of different things come with risk. So, you know, you gotta be a risk taker sometimes. You gotta always think for the future. You gotta think ahead of time. You gotta have some vision with this. So, you know what I'm saying? Like we always say, it wouldn't be wise to take your last $2,600 rent money and invest it in this, because Google, July, you gotta wait till July to, you know, but it's an investment. So if we thinking that Google can, you know, over the long time, 5 years, 2 to 3 to 5 years, if it can, you know, grow. So let's say you get one share of Google at $2,662. Okay, the successful stock split, you know, we looking at research, you know, and is it gonna repeat like different Apple stock split, Tesla stock splits? May go down, may go up, but you know, like they always say, the great stock pickers, the great stocksmiths, they always say, if you wait long term, most likely you can, you know, you can pace with the market, you can win with the market. So if we say we got 20 shares. And this goes up 100%. Let's say it goes to $266. Say Google stock went back up to $266. So if you would do your math, that's like 20 times 266. That's $5,320. So that could be a double up, you know. So that's kind of how it will be. Basically, you know, if you trying to, you know, look to own Google, let's just say, you know, it might go down, might go up. So if you got, you know, cash invested and it goes down, you might try to, you know, do your research, you know, look at the charts, see how they, you know, analytics, and you know how they, you know, all the, you know, gurus and stuff put the analytics together, and let's say this dropped to 1,800. You wouldn't want to sell because you think long term, but you might say, man, I'm probably going to buy another one. So you buy another one at 1,800. And then before the split, you just times that 18 by 20, so that'd be $90 a share. So you would get 20 shares for $90. $90 per share. And then let's say, you know, it go back up to $103. That's profit in there. So either way, you making profits. You know, so you know that's why you gotta say, you gotta always think about the risk when you invest in. And you know, the profits, thinking long term when you invest. So that's just one good opportunity that you can have in the stock market. Okay, so let's just erase this. Boom. So we all know Google gon' you know, they do a successful stock split in July, then that's what you could get. If you got in around there, you could turn one share into 20 shares. The value would go down. You just divide it by 20, and that'll be your value of your 20 shares. And if it goes back up, or you know, over time it go back up, that'll be a successful profit. But you gotta know when to profit take, or you know what I'm saying, you can you know, invest for the long term. That's 2, 3, 4, 5, 10, 20, 30 years. And we're talking about stocks here, so let's go ahead and get this off the board. Okay, so let's put this in real estate. Where could you invest? You know, let's just say $3,000. Where at in real estate could you buy a property, you know, that's livable, inhabitable, ready to put some tenants in it, or already got tenants in it, that you can be making $300 rent payment, $400 or $500. Where could you get that for $3,000? It's kind of hard to get into something, you know, with that. Okay, let's say, you know, you might find some merchandise or something, but if that's all you got is $3,000, you know, and then you might need a business, so that you might have to take $125 out to register your company with the Secretary of State. Okay, you might have to buy some merchandise. So could you just automatically double your $3,000 like that? Or could you even make a $1,500 profit off your $3,000? But you know, if you don't get up and go out and work and, you know, try to sell, try to do this, try to do that, whatever it takes to sell your product, or, you know, put your business together that you got to do. And it's a lot of, maybe some costs, maybe some, you know, hard work that you got to do physically, or you might be sick or some things, or, you know, you might just lose, you know, the merchandise or things that you might get it. What if you get a bad deal or a bad batch or something, and then you just, you know, you have to kind of start over. Let's say you was able to, let's say $500 it cost you to get your business going. So that's be $2,500 left. Okay, let's say you invested $1,200 into some product. So that left you with $1,300. Okay, let's say the $1,200 product was damaged, bad batch. So you only was left with $800 that was good. So you missed out on basically, you know, 11, 10, 9, 8. So boom, you only got $800 worth of product that you can get back. So where, you know, how could that, you know, mess your $3,000, you know, investment to get your business going? You know what I'm saying? So that's why we always say the stock market, if you're doing your research and you picking, you know, good stocks and you get your timing right, will be a better place to start investing, learning how to do business. So if you look at this like business, like you buying businesses, you can learn how to do business with other things, products, merchandise, real estate, car sales, whatever, any type of business that you got to do to turn a profit. You see what I'm saying? So basically you lost some money, you know what I'm saying, in the process. So that's why we say stocks would be a better investment to start off, to start investing things. You know what I'm saying? You don't want to get too anxious. You want to have some patience. You want to do your research. Like any type of business, you're going to have to do research. You have to study. You have to put your work in. You know what I'm saying? It may not be physical work with hands, but it could be, you know, you might have to do work with your brain. So always consider investing in stocks. All you got to do is go to one of the links below. Fidelity, TD Ameritrade, Vanguard, Charles Schwab, you know, some big E-Trade, big brokerages that all you got to do is go in, you get some time and set these accounts up, individual brokerage account or IRA, both of them. We teach people how to get both of them so you can invest for retirement and individuals. So in $3,000, let's say for instance that you bought $3,000 worth of stock, you really ain't got to worry about taking a loss or you getting a bad batch of product, because if you're getting good stock, even though the stock might fluctuate, volatility, it might go down, but you only lock in a loss if you sell. So once you buy stock, you're going to be doing something else to get some more money. You get what I'm saying? You're not going to be just focusing on this and then you just stop. Because once you put your $3,000 in the stock market, you know, it's working for you. Like I say, let your money work for you. You got good CEOs, you got good people that's running these businesses that's helping you. You know, we helping them by giving, you know, providing capital and they helping us by providing their works, whatever they're doing behind the scenes to make that company profitable, and to make sales, and to you know what I'm saying, get revenue, retain revenue. So we all working together, you know what I'm saying? It's a win-win situation. But you gotta have your timing right when you wanna take your wins. When if you down at a loss, you don't wanna take no losses. So that's how you gotta look at it. Just starting out, you know. So and once you start making money, you getting money, and then you say, well, I turned my 3,000 into 15,000. You know. Then you could consider, you know, looking into something else if that's just what you desire to do. But if you turn 3,000 into 15,000, you know, why would you, you know, why you gonna keep, you know what I'm saying, sticking to what you doing? You know, turn that 15 into 30,000, 50,000. Just keep doing what you're doing. And this is real estate. Stocks is basically considered real estate because you got assets and equity that you can sell. You don't need to go out and have to do closing costs, wait on a real estate agent to come through, you know, wait to something, do this or that to close the deal. You can just get right up on a trade session Monday through Friday, you know, and close out your sale. Boom. Even though taxes is in everything, taxes. You gotta. That's why everything in business you gotta learn taxes. So, with any type of business, you need to learn about taxes. Taxes is the most important thing that could crush you if you ain't up on what you're doing. But taxes is your best friend, because you hear these people talking about in real estate, stocks got good, you know what I'm saying, with capital gains. If you hold it over 13 months, you get a tax break. You know, so taxes can be your best friend if you know what you're doing. So I always consider the stock market, because it's low cost. You can get right in with too much of nothing. Really just, you know, set up a brokerage account, set up your account, deposit money, and research and look for good stocks to get in. You know, and then once you start doing your taxes, if you know how to do your taxes, TurboTax, stuff like that, you automatically can just, you know, it just does it for you. Automatically, boom, just add your taxes right off into there. You ain't really got the process ain't too hard. So it's that's if you working your 9-to-5 job and you doing stocks on the side. Boom. Let's say you make $5,500 for that year. Your first year you make $5,500. You making however much you making. When you doing your taxes, you just it automatically rolls your tax over in the software, and you just add it to that. You may not have to pay taxes on it because it's going in with your income, or you might have to pay a little bit tax, but it's all calculated in there for you, and it won't be too much of a headache for you to do it. So I'll pray on this happy Sunday, folks. You know what I'm saying? If y'all found any of this information helpful, you know what I'm saying? If you would like, make sure you subscribe to the channel. Hit the like button. It'll help us out a lot. And, you know, consider following us on our social medias, just different things like that. You know what I'm saying? And always keep an eye out for some of the information that we got going. It can help you out on a lot of things that you're trying to do. And most of all, it can help you become prosperous and make profits in what we're trying to do. So everybody, peace. Make sure you have a wonderful 2020. And let's just, you know what I'm saying, praise the Lord. And, you know, may your wishes come true. Blam.